Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. Joining me and welcome back again to this episode, Russ. Please go ahead and just give yourself a bit of an introduction for those who may not know you.
Yeah, what's up? What's going on, Dave? Happy to be here. The PIP squad, the Passive Income Posse squad. I love it, man. Got to pick up some of that swag there. Yeah, I have a little channel called Dapper Dividends. I don't know, just named it that out of the blue. And around COVID times when everybody was starting YouTube channel and talk about dividend investing and like you, man, passive income, stacking those dividends. And basically the whole idea is trying to maximize our cash flow, the passive income, and not have to touch the the principal, not have to sell any of the stock, and we just want to try to have that interest, the dividends that we have coming in, pay as many bills as possible one day in the near and not too distant future. So, and I'm in Chicago. I
Yeah,
don't have
that's
much of an accent. I know it's the rest of you guys that have an accent. So it's so weird. It takes me a minute to get used to the rest of the world's accent. So cheers.
right. Yeah, well, yeah. I'll try to enunciate my words.
I tease.
Um, yeah, that's a great point of, not having to sell the shares that you own and just letting the dividends roll in and have that capital. What you're hoping is capital appreciation, and what we've really seen in this past year, 2023, is more capital depreciation. A lot of stocks have tanked, and I mean, we know that's part of it, right? The stock market goes up, the stock market goes down. There are bull runs, there are bear markets, and so I guess, yeah, I know we were gonna, talk about this, so let's just get into it, sort of what we've been investing in over this past year and sort of what you've done, because I'm guessing a lot of your stocks are down just because the entire market is down. You might have a few winners in there still, but, um, yeah, what have you been sort of focusing on? What companies or what sectors have you been focusing on in this past year, and why?
Right. So that's a big I'm glad you said the why, because I think for a lot of you watching, and especially if you're a newer investor, you got to have a why, because if you don't have that why, I don't care if it's going on a diet, if it's being in a relationship, or if it's investing, if you don't have a why, you're probably not going to stick with it, and it's going to be really hard to follow through and to do things like we do, like to buy those stocks and to know what you're buying, right? So we got to know what we're buying and why we're buying it, why we're holding it. So one of the stocks that I have been buying the most of, and I'm up to 99 shares now. I'm still waiting on that last 100th, being a little bit stubborn, is Nexstar Media, ticker NXST. And they're the United States' biggest broadcaster. They are just, I think they're a cash flow machine. They just generate so much free cash flow. And I think that a lot of the market has them wrong because they're looking at it as kind of like a melting ice cube. But this is still a company led by its founder, Perry Sook, started in 1996. And the dude just wants to go bigger and better places with Nexstar Media. And it's moving into just so they've been beaten down. Like, I don't know, the Charter Disney thing. I don't know. Did that have any kind of effect up there on any of the telecom stocks or media stocks up in the Great White North there?
So, well, yes and no. Like, obviously, Canada really does follow the entire world sort of follows what the US does. And especially Canada, because we are right next door. We're, the closest neighbor, I guess, other than Mexico to the south. But um, there's always sort of repercussions of anything that happens in the US happening here. So, when there is like I say, bear market in the US. Eventually, it might not happen right away here, but there's going to be a bear market that follows here as well. So, and then same with the bull run. When the markets are going crazy, and everything's going green and up and up and up, then that's going to happen here as well. So, um, yeah, telecoms. That's an interesting one that you bring that up, because that's one of the ones I've been focusing on this past year is Bell Canada, ticker symbol BCE, and I started into it last December, just around the end of 2022, and I think my average cost in the beginning, they were around trading around 62, 63 Canadian dollars, and then as of close yesterday, they were at like 50, $51. So I've been dollar cost averaging down all year long, and you know, Bell Canada, I'm not afraid of of that company, because they've been around for 120, 130, 140 years. Basically, ever since telephones were invented, that company's that old, right? So,
Is there
um,
any worry? I've never really looked at them, but do you have any kind of worry? Like I sold a bunch of Verizon to move it into more AT&T, which I do want to get out of, and I'm being very stubborn. I get very, very stubborn wanting to not lose any money. There's a famous saying that you don't have to make your money back the same way you lost it, and this is a lesson that I'm still trying to learn. I'm still
yeah,
taking to heart.
me
But
too, actually, on
are
that
you
one.
any do you have any worries, like, because what I've seen from Verizon, AT&T in particular is that they are in a highly capital intensive industry,
Yeah,
and they have to spend there's a lot of competition, and they have to spend a lot of money, to put it pretty bluntly. So is there kind of the same thing with BCE? I mean, I don't are they in any kind of media as well, or are they just
yep.
so give me a little bit of a rundown in a quick, guy
Yeah,
like me can
so
understand.
basically, like I said, ever since telephones were invented 140 some years ago, Bell Canada has been around obviously in the beginning they were simply a landline company, and then obviously transitioned into subsidiaries of Bell Mobility, which is that's my cell phone is with Bell Mobility. And so another one of my reasons of why is like the saying turn that cash register around. So it's like I'm trying to buy enough shares
You
that
need
they're
that on
paying
a
my cell
shirt,
phone bill.
dude. That's you got to put that on a shirt. That's your tag, man. That's what I was on a podcast with Ryan Williams and the one and only Harris Elliott, and we talked about that. Where like your name came up, turn that cash register on. I'm like, why doesn't he have swag with that on it? You got to
I
get
do.
that done, Dave.
There's a coffee mug that
Oh,
has it.
see, I didn't even know. Look
Yeah,
at me, I'm
so
living under a rock.
that's actually a great time to bring up the partner of this video, investingshirts.com. There you can see the passive income posse coffee mug, and on the back of it, it does say turn that cash register around. Uh,
There you go.
all caps, t-shirts, hoodies, toques. And obviously, Patrick has tons of other great merch over there as well. So check out the link in the description below. Use code word posse for 5% discount.
Dude,
Um,
beautiful. The Pip Squad swag.
that's
Swag.
right. With that said,
Sorry
though,
to derail that. Yeah.
getting back into what we were just talking about with Bell and being around for, like I said, however many 130, 140 years. And yeah, exactly what you were saying, the amount of cash needed to, you know, keep running those types of companies and the cash flow investment and the reinvestment and the debt that they take on. Yes, that to me is the worrisome part. Last January, right after I started investing into Bell, they raised their dividend, and it was like one of those opposite ones where I was like, are you sure you want to raise the dividend? Like usually investors are really happy about a dividend raise, and I was a little bit I don't know if the word if skeptical is the right word, but it was like
Mhm.
very much, are you sure you want to give me a raise right now? Like, do you not maybe want to take some of that cash flow and put it towards debt repayment or this massive infrastructure that they all have to take on?
Yep.
And just to a separate point, I also want to point out, you mentioned like the amount of competition, where in Canada it's much much different. The CRT, Canadian Radio and Telecommunications Commission, everything is much more regulated. And so there's basically just four providers, being Bell Canada, TELUS, Rogers, and now the fourth one becoming Quebecor, and that's a whole other story of uh, a merger slash takeover. And um, I got into that quite well with Anthony, a newcomer investor, recently on another
Mhm.
podcast. So I won't try to rehash that, but yeah. So basically, less competition also makes you feel, I think, a little more comfortable in that investment. They're not gonna, get completely wiped out, and the longevity too. Like I said, a company that's been around for well over 100 years, you're looking at that longevity, and so
Do you have any idea about so how many people are living up in Canada nowadays? Do you have any rough guesstimate?
yeah, that's a great question because actually just a few months ago, we went over 40 million.
And so what percent of market share then would you say? I mean, I don't even know if you know this. Does BCE have? I'm just because I know AT&T has a giant market share here in the United States. Of course, I don't remember what it is because I've been
Right.
focusing like the Eye of Sauron. I've been focusing my attention in other places, just waiting for this dog to come back up in share price so Papa can get out with a little bit of little bit of a loss, or maybe even break even or a gain. But
Right.
so what's BCE doing over there with the
Yeah, so
market
honestly,
share?
you're right.
Anything?
I don't know the
Yeah,
exact market share, but BCE is the biggest of the 4 telecom providers,
nice.
TELUS being second, and, TELUS I don't own any of right now, but they also are they've been trading at a 52-week low and keep setting lower 52 weeks lows for the past 2 months or more, and so they keep looking very attractive as well. Um, and TELUS is into different things as well, like the telehealth types of things. Whereas, like you mentioned, Bell is there's another subsidiary called Bell Media that owns television and
Mhm.
radio and production companies and those types of things. And then obviously Bell has tons of other uh, companies and subsidiaries as well, all under that Bell Canada umbrella.
Well, it's kind of like so I don't know. Would you say that they're kind of like a bond proxy? Because I think from what from excuse me, what I've been seeing is that a lot of the bond proxies. That's why as the rates have been going up, they've been getting crushed. So like all the utilities here, obviously all the REITs, and I think the AT and T and Verizon's are kind of fall into that bucket of being a bond proxy because it's like if you have income investors just strictly looking for income and not caring about total return or capital appreciation, like it doesn't make sense when you can get like the 10-year treasury here in the United States is pushing, it's flirting with 5%, which is
Yeah,
pretty historic. Hasn't been that high, I think, since 2007. So if you don't care about your capital gaining, the money you're putting in, and you just want income off of that, I think we're looking at a real yield after factoring in for inflation of like 2.5%. So like it's a no-brainer choice. Like if you just want that income, why would you put it into a REIT or a utility or like an AT&T, which has been traditionally thought of as a great, income investment? So I think that's one of the reasons why. But the beautiful part, and correct me if I'm wrong, about dividend stocks is that the lower they go, the more people sell off, the higher that yield is going to get.
right.
So, right in the biz, we kind of call that the accidental high yielder. And I think that's where we have to be diligent to know if we're getting involved in a yield trap or if it's a good investment. So, for me personally, like that's why I said I think I've also been buying, aside from Nexstar Media, which by the way, if you guys watching and gals watching don't know, they got the CW a little bit over a year ago for basically free from Paramount and Warner Brothers Discovery. They had split ownership of it. And Nexstar essentially took it off their hands for free. But after they looked at the books, they essentially pulled in on their earnings report a $54 million gain on that. So it's almost like they were paid money to take the CW off of their hands. Now, they did get a 75% ownership in a business that essentially for every $1 that was coming in, $2 were going out. Not very good, not sustainable. But
No,
the cool thing is that Nexstar wants them to be profitable by 2025. And they're doing all kinds of interesting things with it, like trying to turn it into Fox. I don't know how aware of you are of Fox here in the
yeah, sure.
United States, but they have they do sports, they have entertainment, they have scripted and unscripted shows. So they're trying to make the CW kind of a clone. They signed up ACC, college football, and basketball. They're going to have some NBA games on there, and they're also going to have. I just sound like I work for the company. This is what happens when you when you do a lot of research into a business, which I'm trying
Right.
to get better at. And I'll leave it for you. But what do you think? Do you think that it is important to buy the business and not the ticker? Because a lot of beginner investors, I think, make the mistake of buying a ticker symbol and not really buying or understanding the underlying business that they're buying. So,
Yeah,
what do you think?
maybe not just the ticker symbol, but I definitely fell into the chasing the dividend yields when I switched to that dividend investing strategy. And again, this is going back to about last December. It was actually when I had Dividend Johnny Boy on the podcast, and he kind of really uh, turned the light bulb in my head that you need to be looking at the dividend growth stocks and not chasing the high yielders. And like you said, though, sometimes you get into the accidental yields where it's a company that you know and trust and has been around for the longevity of well over 100 years, and you're like, okay, well, they're not going anywhere. So, over time, I'm fully confident that these companies are going to go back up in price, and there will be, then you will have that capital appreciation. You've been able to dollar cost average down for a year or two, or maybe even three, and then you're looking at your yield on cost. Down the road, 5, 10, 15 years down the road, your yield on cost is suddenly amazing, right? So I,
Yeah,
I,
it's
I
like
guess those are my quick thoughts
McDonald's.
on that.
Dude, McDonald's just gave another dividend increase, and a couple
Yeah, I saw
people are
that.
like 2.6% is their current yield. But if you were to invest 10 years ago, you would have a yield on cost of over 7%. And I didn't even look at how much the share price, the total return, the capital appreciation, all the dividends. I mean, it's got to be substantial. And all you have to
Right.
do, and this is the beautiful part, Dave, all you have to do, and what I love, why dividend investing fits me like a hand in glove. By the way, fantastic song by the Smiths, is that you just hold. You don't have to
Yeah.
do anything. You buy
Yeah.
it, you hold it, you collect the dividends. Maybe you drip. Do you drip? Are you a dripper or do you not drip? Do you drip and sip? That's my guy Ryan Williams's thing over there. But what do you do? Are you a dripper, Dave?
Well, manual. I don't do automatic drips, and the reason for that is, well, one, my platform, Wealth Simple, which in Canada is very similar to Robinhood, from what I can tell, and so they just recently started offering drips, like automatic drips, within the last, I want to say, 2, 3, maybe 4 months. Um, and so I had always been the manual drip person, taking those dividends and reinvesting them and reallocating them. And a big part of that was because I look around sort of my portfolio and say, "Hey, I can dollar cost average down on this month or this quarter." And so, I might be taking from company A to buy more of company B, but at the end of the day, yes, I am still, reinvesting my dividends.
Yeah, same here, right? To drip or not to drip, that is the question. And the good thing about dripping, which as I think about building wealth, I think one of the cheat codes to it is when you can automate things, when you just make the more things you make automatic, you don't have to think about. I think that is the cheat code to building wealth. And
Right.
dude, when you drip, it forces you to buy less at higher prices when the stock price is up, but then you will buy more when the stock price is down. You get more of those shares because it's cheaper. So
Yeah.
that's one of the benefits. But the bad thing is if it's a bad company or you've lost track of it, then you're buying more of something. So I'm the same as you, man. I'm a little bit more surgical with it, and sometimes not, it's to a fault, but I like to receive the dividends. I don't drip. I have that turned off. The spigot is off for dripping, but I receive the dividends, let them collect in my little bucket there, and then I cut that with new cash. And then with that infusion, then I, target select what I want to buy, like
Yeah.
a Next Star Media or a company like Vici Properties, ticker VICI, which is one that I've also been buying heavy over the last quarter, which, by the way, I got that coming out of my next newsletter, the Q3 23 portfolio review update, whatever the heck you want to call it. But Vici Properties, that's another REIT that's been beaten down. They're a little bit of a newer kid on the block. They were born out of the Caesars Entertainment bankruptcy. I think that was in 2018, 2017, 2018.
Right.
Dude, all the insiders have never sold a share that they've received. I like their CEO. His name is Ed Petoniak. Dude's a veteran of the industry, and they own essentially they're Las Vegas. They own
Yeah.
most of the properties on the Las Vegas Strip, but they're also trying to expand into experiential experiences, if I can, duplicate a word there, which like sporting events and college stadiums and just all this kind of different ways to make money and generate more revenue outside of real estate. And like Great Wolf Lodge, it's like a family fun place. That I think they got one up here in the Wisconsin Dells area by us. But yeah, so that's a REIT I've been buying. And how about REITs? Have you been buying any Canadian REITs up there? I think last time we might have chatted about one. Did you buy
Yeah.
any of?
So,
Yeah.
yeah, I have several REITs. Honestly, probably too many. I am diversified within my REIT portfolio, meaning like I have some retail, I have some healthcare, I have some office, and etc. Um, Probably have some warehouse in there too. I'd have to like really dig through and see what I own. Um, And I've still been buying some here and there, but not nearly as much. And obviously, the big reason is REITs have been really beaten down this past 6, 8 months with interest rates rising, and because they are real estate centric, the interest rates really affect them and their share prices. and I'm glad you brought this up because I wanted to come clean about this too. In the last
Uh-oh.
year, less than a year,
Confessional.
I've had 4 dividend cuts, which are not not nice to go through, but 3 of those 4 were REITs, and one of them was called True North, ticker symbol TNT, and they are primarily an office REIT that leases to government build or government agencies, whatever they may be.
Hmm.
And I started buying that in the middle of COVID when offices were closed, thinking I was like really smart. I'm like, okay, it's low. People are going to go back to work eventually. The government's always going to pay their rent or their lease because it's taxpayer money. So why wouldn't they? And I was even thinking like this is a little bit of a play around at getting some of your tax dollars back as well, right? Um,
Yeah, yeah.
yeah. So
So
I
what
guess I was
happened? Was the
wrong on maybe
government
not
not
so much
paying? What
wrong.
happened? Yeah.
Well, yeah, just so that one, they cut their dividend 3, 4, maybe 5 months ago, and they cut it right in half. So that's a big slash, right? I believe they were paying 5 cents a share monthly down to 2.5 cents a share, and again Canadian dollars. But
Yeah.
so that one was difficult. More recently, Northwest Healthcare, a healthcare REIT owning the clinics and doctors' offices and dentists' office space and those types of things. And just within the last month or 6 weeks, they cut their dividend. That one was easier to take because the writing was on the wall. I'd been kind of expecting that dividend cut for a lot longer, so it was kind
No,
of like,
that's interesting. Real quick. So, if you saw the writing on the wall, why didn't you sell? Like, was there a reason? Did you, hope maybe they wouldn't? Or
no, it wasn't that. I guess because the stock price had already tanked, and going back to what you just said, you don't always have to make your money back in what you lose it in. So,
yeah,
just sort of that long-term hold mindset is like, well, hey, you know what? Maybe after they cut their dividend and they can get things realigned and back in order, then maybe this will become a strong company again in the future. So, anyways, I'm
yeah,
still
it's
holding it.
okay, dude. You can't fault yourself for not knowing the future, though. I mean, my one buddy, little quick story, my friend Harris Elliott from One Penny at a Time
Yeah,
podcast, he got out of VFC Corp before they cut the dividend. He had great foresight and prescience there. So I let him, pick some lottery numbers. I figured he knows. I used some of my kids' college money, but he didn't do so hot on that. But as far as dividend stocks that were going to be cut, he's batting 1,000 so far. No, he didn't invest my kids' college money. That's a sad attempt at humor, Dave. But yeah, there you go. So I'm sorry to cut you off, but yeah, we can't, dude. You can't know the future, and if something doesn't work out the way you thought it might with the information you had
right.
on hand, you take it, you file it away as a lesson learned, and then when you see a similar situation in the future, then you can delve dive deep into those files of your mind in the deep dark recesses and say,
Right.
hey, I think I've seen this before. So yeah, I'm
Yeah,
sorry, so you were
exactly.
saying, yeah.
Well, I'm just gonna quickly touch over the other 2. So there was a 3rd REIT that got cut, and I won't even go into that one because I wanna get to the 4th one, which was AQN, which cut their dividend, last
Mm,
January, Algonquin Power. And that was a very popular one, in the Twitter, community, now X community, because, again, people figured that dividend cut was coming. Again, I don't have, huge positions in any of these, so it's not like I'm losing hundreds of thousands of dollars or even tens of thousands of dollars, right? And so, circling back or to AQN, my point there is that again looking at that long term mindset. I'm like, well, just because the price has decreased and they cut their dividend, well, all those power plants that they own and all the infrastructure that they have, that didn't suddenly become less valuable. So,
mhm.
again, 5, 7, 10 years down the road, after this dividend cut and after management realignment, are they getting things back in order? Is this going to be a very profitable company again in the future? And I'm kind of betting on yes. Like just recently, just recently, um, I bought some more AQN at a very low price. Not a lot. Like I think I bought 3 shares or something at like 7 or 8 Canadian dollars. So again, you're investing 20, $25, but it's still.
So why did they cut the dividend? I don't remember. What was the whole hullabaloo for that?
Yeah, so, honestly, I'd have to go back to you because last January was quite some time ago now in the memory, right? But,
Yeah, yeah.
basically, there was, I guess, just mismanagement, management mistakes, and so they brought in new management that is obviously, they cut the dividend and just trying to get it back on track.
Well,
But to
you know,
dive deeper
as
into that, we'd have to go back in time to last January
hey,
to
I
dig
will
deeper into
say
it.
once again, yeah, we all want passive income, but it definitely can be a good thing. It can be beneficial for a company to cut a dividend because,
Yeah,
first and foremost, the survivability of a business is at the forefront. Like, if the business can't survive because it's paying a dividend, get rid of the dividend. Like, the
yeah,
hell with it. Like, you know, you need, that's why we always say you can't buy a business, you can't invest in a stock just for the dividend. And believe me, like, a lot of us still are learning that lesson, but you have to buy it for the business. And like the business, that happens to also pay a dividend, is what I have learned in this journey that I've been on. And yeah, so I don't know. That'd be curious to see why they cut it. And if it is management, they got new management in, they're not going to be bought, right? And that's a risk
yeah,
too. Management is always a factor in the business because if you get new management in, they're not beholden to that dividend. They're going to be beholden to their jobs and making that business profitable. So
exactly.
that's interesting, man. Interesting.
So one more that I believe is a temporary dividend cut. And remember last time you were on and we talked about DFN, which is a high yielding covered call ETF. And then I believe you even did a video about it, right? DFN.
I don't think so. This is the first I've heard of it. So if I did it, that's pretty frightening because it means I have absolutely no recollection of making a video and looking into something. So
Yeah,
I'm
you did.
interested to learn
You did.
about
I
it though.
watched it. You definitely made a video.
EFN? Say that again. EFN?
D D is in
DFN.
Dave. DFN.
I
You
don't
don't
know, man.
recall.
You're freaking me out here. You're freaking me out because I don't know what DFN. I'm being serious. I don't know what DFN is. It may be time to rush to the emergency room right after we're done recording this. You might
Yeah, so
have me
basically
confused with that
they're a
other
high
tall, handsome
yielding
guy. Yeah.
covered call ETF. They own the Canadian banks and the Canadian telecoms and a few other of the um, really strong Canadian companies. But again, because the market has tanked and they have some metrics that they use to pay their dividend, they have actually not paid their dividend in October and September of this year. So I do believe it's a temporary cut. That when when the share price, you know, regains its value, goes back up, that they will reinstate that dividend. So yeah, that's just another one that I feel like it's a little bit of a hit. I'm losing getting 10 or 15 bucks a month from them or whatever it is. But
Mhm.
at the end of the day, they've got to do what they've got to do to keep themselves in business, keep that fund or ETF going. So you
Yeah.
mentioned get back to you because it really feels like a lot
Sure.
of this episode has been you interviewing me, which I'm okay
I,
with. It's fine.
I love it, man. I love the why. I'm having a fun. I'm having a blast here.
Awesome.
Sorry. Go ahead. What do you want to
Well,
ask me?
you
Shoot.
said Next Star Media off the top. Then you said
Yep.
Vici, the Las
VG.
Vegas REIT, and I guess what else have you been sort of focusing on in this past 6, 8, 12 months of investing?
Yeah, so the Schwab US Dividend Equity ETF, also colloquially known as SCHD, and I have been buying that. So I picked up 25 shares over the past 3 months.
Wow.
And that one, I think I'm at 149 shares or so. I don't know. But yeah, I like that one. It's starting to fall out of favor. And I know this because if you look at the ratio of new financial videos on YouTube, the percentage that are not covering SCHD now, it's dropping off. So it was a hot muffin there for a minute, but
Right.
I like it. And this is also why it's so important. You can't, no matter what we say, you cannot just run out and buy something because you heard Warren Buffett buy it or Charlie Munger or Manish Pabrai or Guy Spear. I love all these people. This is just fun. These become like sports to me. I used to watch a lot of hockey and it's kind of, I didn't have any control over it, but investing, I've been putting more time investing into my investing knowledge, which
Right.
is returning more dollars than, watching hockey. I watched a lot of hockey in my time, but yeah.
I'm
So as
Canadian.
far
Think
as,
about how much hockey I've been like
well,
live
it's
games.
required. Yeah. You
Yeah,
have to by law. I think the government passed that law that you have to watch a certain percentage or you go away. They
yeah,
put you
yeah.
in a
The first thing
Canadian
you come out of
gulag.
the womb, and the first thing they do is, strap a pair of skates and give you a stick and say, "Okay."
Yeah, yeah, but now if BCE, don't they isn't that a way you can invest into the Bell Center, right? They own the name on it, or do they own the Bell Center? Do you know?
That's a great question. I don't know if they own the actual physical property, but yeah, they definitely do have the
Yeah,
sponsorship and naming rights to the
yeah.
Bell Center in Montreal.
They might have just paid money to have their name slapped up on the side of the building where the Habs play.
Yeah,
But yeah, as far as SCHD, I love it. I looked at the fundamentals. I looked at what they're investing in. They have a bunch of metrics to select some of the best dividend paying companies, and just it's one of those things that I'm not having to think a lot about. It's just becoming a backbone of the portfolio, one of the bigger positions, and you invest in over 100 of the best. There's some stinkers in there like Ford, and I'm not a big fan of IBM these days, but that's one of the there's no panacea to investing. There
right.
is an upside and a downside to everything. And when people go the ETF route, yeah, you get some really good businesses, but you're also going to get some businesses that you're forced to invest in that you may not like. So you just have to know what you're buying. Like we started off the why, know what you're buying, why you're buying it. And that will definitely help you along the path. So if you don't know what you're buying and you're watching this, I'd say you're going to have some problems. You
Yeah,
might
you need
suffer
to
a
do some
few.
more due diligence and do your own research and really dive into what it is that you're buying so that you know, well, one, what it is, and then why you are buying it. Circling back to that big question of why. Why are you investing in it, and why are
And
you investing in general?
And that's one of the things that it's the why can be your North Star. Or if you're a bowling fanatic and you're a lunatic, it can be like the bumpers when they put up bumper bowling so the ball doesn't go in the gutter. It keeps it focused on the lane headed toward the pins. Is that you want to know what you're doing? It's your North Star. So for me, I predominantly want to own businesses that are mature and they have really good cash flow and they use a portion of that cash flow to pay a growing dividend. So that's why when I see a company that cuts their dividend, it kind of reminds me like, yeah, I might want to just get out of this one because they cut the dividend. So something's going on there that's not
Yeah.
fitting into the Y. And the ball jumped over the bumper and into the next lane. And now I got to deal with a guy who's upset that my ball's in his lane when he's probably playing for drug money or something. But either way, yeah. So the why is just so very important.
So very important. I'm going to segue this with your
Mhm.
comments of the Bell Center sponsorship. So, as I mentioned, the telecoms, Rogers being another one of the big ones, they actually sponsor three stadiums in Canada. There's Rogers Place, Rogers Arena, and what's the third one?
Don't ask me. Is that where
Yeah,
The Jays play? One of
yeah.
them?
So
I
one
don't.
is
Yeah.
Rogers Place, Rogers Arena, and oh, Rogers Center. And so I think that's where the Jays play is Rogers Center, and then the other two are Edmonton and Vancouver.
Have you been to a
Uh,
Jays game? Isn't that the one they have the hotel that's built into the side of the building and
yep,
they had to
yep.
black out the windows because people were having relations during games with the windows open and now there's like a one-way mirror, I think, so you can't see in.
Yeah, yeah. So they built that. That was called the Sky Dome when they first built it way back in the
Ah, that's
early
right.
'90s
That was the
before
Gary
before
Carter days, right? Not
yeah,
Gary
before the
Carter. No,
sponsorships of stadiums became a thing.
yeah.
But I was actually segueing that around.
Go
That was
ahead.
just a little
Sorry.
side note of Rogers having three sponsorships into Scotia Bank or Scotia Place is another uh, sponsorship name, which is where the Maple Leafs play in Toronto, and Scotiabank being sort of the other one big one that I've been investing in this year, dollar cost averaging into ever since last December. And so those are the two I've really been focused on, Bell and Scotiabank, one of the Canadian banks. And I know there's a lot of people in the comments are going to be like, you should be investing in Royal or TD or BMO. And it's like, okay, well, yeah, or National Bank or even
National Bank,
ATB.
dude.
Yeah.
Mike the dividend guy would have a word with you. That's
He has
his pitch.
he's had a few.
Yeah. Yeah, he's Mr. Canadian Bank. I mean, that guy is like the Death Star of Canadian banks knowledge.
Yeah.
You need to know about Canadian banks, you go to Mike the dividend guy. That's for certain.
Yeah, definitely. Yeah, no, I can't agree with you more there. But same with that what I was saying about Bell. with
Hey,
these
wait a
tier.
minute. That's a cheat code. You get him on your podcast and you say, "So Mike, tell me about Canadian banks." And then you will not have to say another word for the next 37 minutes. Trust me. It's a cheat code for your podcast. Okay, sorry.
Yeah, thank you.
Keep
No,
going.
that's exactly true, and that's very similar. He's been on the podcast already, but I'd love to have him
Oh,
back
nice.
and catch
Nice.
up. Um, yeah, so similar to what I was saying about Bell, with BNS, Bank of Nova Scotia, I started investing and they were trading around that 68 to or 66 to 68 Canadian dollar range. And as of market close yesterday, I think they were at 59 or 60 Canadian dollars. So
Mhm.
same thing all year. I've been dollar cost averaging down. But again, a Canadian company that's been around for, this one's been around since they started paying a dividend in like 1832 or 1833. So um, what's that? 170 years? Actually, no, that's 190. That's
Yeah, 190 years. Yeah.
90 years. So, um, they're not going anywhere anytime soon. And I'm sure you're aware of how strong the Canadian banks are financially. And you really, again, this is not financial advice, but you can't go wrong investing in any of the big five or six. It really seems. So I just kind of wanted to tie that in there. 'Cause sort of, you talked about what the big two or three that you've been investing in this year, and I just wanted to, uh, full transparency, like the other one I've been sort of trying to stack as well this year.
Now, you talked about that light bulb going on in your head. Who would supply the power to that? And do they pay a dividend?
Yeah, Hydro, Hydro One in
Hydro.
Ontario, and
Okay, interesting.
my thought at the start of the year was all three of them I wanted to really, and I did start into Hydro One as well. They've supplied the electricity to 96 or 98% of all of Ontario, so it's kind of a bit of a no-brainer as well,
It's monopoly.
more or less, right? And basically, I just because I got so focused on Bell and BNS that every time I'd buy, like, say, 2 or 3 shares of each of those, it'd be like, "Oh, I don't have another 40 or $80 left over to buy 2 or 1 or 2 of Hydro One." So,
So
um,
how many stocks do you hold nowadays? How many do you got in your portfolio up there?
total with, I think 2 ETFs, so total positions is think it's still at 20. I think it's 25 now. I think it's up to
Oh,
25.
okay. I was thinking you were gonna be way over, like
No,
like
no,
my guy Darth Dividends at like 200 positions or something. I'm like, buddy, I don't know how you keep track of
yeah,
all
no,
those.
that's
That's
way too many. Same Dividend stockpile, Jeremy, the last time he was on,
yeah.
I know he's been on your show because,
Mm.
yeah, yeah, and I think when I talked to him, he had something like 70, and I was just like, "Wow, you really do have a stockpile of dividends," but, like, isn't that way too many? Because I keep saying to myself, "Dave, just keep it under 30, keep it under 30." Because like I've said, there's, a couple other Canadian banks I'd like to open a position in. TELUS, I'd like to open a position in. But at the same time, I don't want to, you spread yourself too thin. You want to keep stacking those other ones and dollar cost averaging into those other ones that you already have a position in to build those dividends and that passive income higher and higher. Those are my thoughts on that.
I like it, man. Yeah, it's like Warren Buffett said, if you had a punch card with only 20 slots and every time you bought a stock, you had to punch out one of the holes, and when it filled up, you could never buy another stock. You would really, really look at what you were buying, and that's one of those ways that, I think it was Peter Lynch in One Up on Wall Street said you should spend at least as much time researching a stock as you would buying a refrigerator. And a lot of people don't do that. They'll just hear somebody say, yeah, I like PepsiCo. And they're like, oh, that guy likes PepsiCo. Okay, I'm buying. It's
Yeah.
not a good way to go about things. So spend at
No.
least as much time as you would looking into a new refrigerator that you would a stock, and hopefully
I
things will
definitely
work out.
agree with that you wanted to look into it and know what you're buying, but I do kind of think, the companies like the Pepsis, the Coca-Colas, the Home Depots, the McDonald's, the Starbucks that everybody knows, everybody's familiar with.
Mhm.
I feel there's a little bit more of maybe leniency there because you're already familiar with what the company is, what they do. You know that like the Starbucks and McDonald's drive-throughs are lined up all day, every day. You know that Home Depot is busy every Saturday morning. Uh, especially in the spring when there's new projects going on. I right. So I agree with you. Definitely, look into companies, do your own research and do your own due diligence. But I definitely feel there's those top tier companies where maybe you can spend a little bit less of your valuable time doing that. That's just, I guess, my opinion.
That makes sense, unless you were investing in a Blockbuster Video because there was always people in there, like I
Yeah.
remember.
Yeah,
But
yeah.
yeah, that's cherry picking an example that didn't work out. But yeah, to your point, dude, you can chances are Home Depot's not going anywhere. Yeah, like another one I was looking at is Dollar General. They've just gotten smoked. And I still haven't dug into them because I don't think they're done. I don't think they've bottomed out yet. That's one of the things they say is trying not to catch a falling knife when a stock keeps going down. If you try
Yeah.
and catch it and think you found the bottom, they say it's best to let it hit the floor, rattle around a bit, and start coming back up before you buy it. But yeah, Dollar General may have further to fall. Target is one that I had been buying at the beginning of the quarter, but then because Nexstar, the whole charter Disney thing, it started getting crushed. I actually sold more Target to buy more Nexstar. And Target's another one, man, that a lot of people don't like it right now. It's almost down to $100 a share, and at one point it was up in the 220s or 230s, in
Right.
the not too distant past. So it just goes to show anything can happen, nothing is guaranteed, and if it can happen any day, it can happen today, right?
Yeah. Yeah, definitely right now, Walmart and Costco look like the better buys, in that sector than Target for sure.
Yeah, I like Costco. My buddy Harris Elliott loves their hot dogs there. He'll go walking through just to eat hot dogs, and I don't know what he does. He takes his shirt off, lays down in the bathroom, checks out the ceiling tiles on the from the floor. He's a strange dude, very strange dude. So
Yeah, I've had Harris on here before, and I've been on his podcast as well.
yeah, buy him a hot Costco hot dog. He'll come on your show. He loves those things. Oh my God, what happened?
I put up your, newsletter slash blog, and obviously I will
Oh,
have
it's
this linked in
more
the
of a landing
description below.
page now. Yeah, it's more of a landing page now. It still needs some work, but yeah, we got a few things there. I got the portfolios, free ebook. I put out a newsletter every week. I have the podcasts and a few things that I
Yeah,
spend my
links
my
there
free
to
time on.
YouTube and Spotify, Apple, Google Podcasts.
Yeah, shout out to my wife. She redid this thing. She's learned it. I don't have
Awesome.
time. So I was like, we need to redo the website. And I had articles. I was trying to be a blogger too, but doesn't work out, man. Doesn't work out. But yeah, on the portfolios, like up there, if you click on one of the portfolios, like the bridge portfolio, that's our taxable account. It goes no at the very top, the tippy top. No, well, I guess those would have worked too. But yeah,
Yeah,
there you
yeah,
go. The bridge. Click on
yeah,
the
that one.
bridge right quick. You can see all my holdings. Oh my
Oh,
God.
oh, it's
Well, I
telling
guess
me
it's saying I should have that SSL turned on. So don't go to this guy's website if you can. You never
that's
know
just
what we're gonna.
my McAfee being overprotective,
Yeah. Either
an
way, so if you're
overprotective parent.
watching, yeah, if you're watching and just dapperdividends.com and you can always check out what we got in the portfolio, what's shaking and cooking and
And then
uh,
over here we
all that
have,
stuff.
did this come up here?
Yeah. Those are
YouTube,
old pictures. I gotta get those. Yeah. Look at this. Yeah, that's the whole thing, man. Helping you to be a better dividend investor.
right,
That's
right up
what we
here,
try
helping
to
you
do.
to be a better dividend investor. New videos weekly. And congratulations, 9,000 subscribers. That's pretty amazing. Closing in on that 10,000 subscriber milestone.
Oh, that's that's called trial and error is what that's called. Trial,
Nice. And
error,
then,
doing things that don't work, and then hopefully, getting a little bit better.
cool, cool.
Hey,
So,
shout out. I just up a little bit on the channels I share over to the right. Ari Gutman, man. Dude, if any of you know him, prayers out to that guy. He's it's got rockets going off by where he lives, and it's been it's been heck of a time over there in Israel these past 24, 48 hours, whatever it
right.
is now. So
And
he's lives over in Israel. So he's one of those in our dividend investing community. So we wish him all the best and
all that's
safety.
for sure. Yeah, that's scary times over there right now.
Puts things in perspective, you know what I mean, man? You
Yeah.
you you read about I was reading some of the things going on over there, and it's like I'm worried about like a dividend cut or something, It's like that is the least of some of these people's worries. So um, you know, thoughts and prayers out to everybody out there.
And then you can find Russ here on X, the app formerly known as Twitter,
The
at
artist
Rusty
formerly known
Ram
as Twitter.
78.
Yeah, I'm one of those guys that never created a proper account. And I think I started this. I jumped on Twitter in like 2010, 9, 11, something like 12. I don't know, somewhere around there. It's all a
Yeah.
blur. But yeah, I just I don't know. You can hit me up there, send me a message, do whatever you want to do. I don't care. Say whatever you want to say. I might not respond always, but no, I always respond to everybody. That's kind of one of my things.
Right, exactly. So I know you're busy. Before we started recording, you were telling me you have so many things going on today, so I don't want to take up too much more of your time. I do really appreciate how much time you have spent with me here already on the Passive Income Podcast.
Dude, it's fun. It's chatting.
It's great. I love having these conversations. I love having you back. And but before we do sign off, do you have
We're
any?
not splitting the atom, Dave. We're not solving the mysteries of the universe in great detail. So it's not a lot of effort to just sit here and chat with you. And hopefully everybody hears it and enjoys it. Sorry,
Exactly.
I keep cutting you off, man. My
I'm okay with it
apologies.
though. Yeah, I was just gonna say before we sign off, any final thoughts, any words of wisdom, um, any recaps, anything else you'd like to say? Anything that we missed talking about that you wanted to talk about?
Yeah, no, just with what's going on, I that's the what just popped into my head is the if it can happen today or if it can happen any day, it can happen today. That could be anything from going from your great white north to the great white north up in the true north and
Up in the
dividend
sky.
cuts, anything. So don't take every day for granted and just be better. Just, improve yourself. Be just you know what it is, man. I guess I'll leave you with this. The Infinite Game. There's a book. I don't remember who wrote it, but Simon Sinek has another take on it on the Infinite Game. You need to know what game you're playing. Like when we watch hockey, that's a finite game, meaning that there's defined players, defined rules, defined time limit. So there's an end, there's a clear winner and a clear loser. Unless it's ended in a tie, which they don't do anymore. They have the shootout now to break that. My exciting little touch. But uh, there's the infinite game, which is investing. There's no time limit. It goes until you die, and then when you die, it still keeps going.
Yeah.
Same thing with life. Life is the only end is when we expire. So uh, the best thing you can do is to try to be 1% better than you were yesterday. That's really, I've learned, the only thing you have control over. My wife could come downstairs right now and just smack me right upside the head. I have no control over that. I only have control over how I respond and what I'm going to do going forward in the future. So, lovely lady, that would never happen. That's just an extreme, bizarre example for all y'all. But
Right.
yeah, so know what game you're playing and just try to be 1% better than you were yesterday, I guess is what I would say.
Yeah, that's a great thought. I actually just had a recent guest on, and going back to one of your earlier points about all you have
Who
to
was the
do is
guest?
I can't remember. You're putting me on the spot.
Dave.
But he said all you have to do,
Okay.
all exact same as what you just said. All you have to do is buy and wait. And to your point, there is like life ends and death. He's like all you have to do is buy, wait, and breathe. And my response was, you don't even have to breathe. You could literally die, and those dividends keep rolling in, right? So
Absolutely. Dude, that's great. Yeah, you don't even have to. They did a study and they found that some of the accounts that did the best, some of the best performing investment accounts were from people that either A, forgot about them or B, died
yeah,
because
because they weren't touching them.
because they weren't fiddling with the knobs, trying to outsmart themselves and make all these really astute and shrewd moves. They just either forgot about their account or just died. And those were some of the best performing accounts over the long term.
Right.
Go figure, right? So we should learn something from those that are departed investors.
One final thought, nothing to do with investing, and I know you and I
Yeah.
have had some DMs back and forth, and even some public conversations about hockey. We've talked about hockey here, and obviously you're in Chicago. You know what I'm going to say? Two words or one name:
Oh yeah.
Connor Bedard.
Yeah. Well, we'll see. The kid's still yet to play a regular season game, so hey, you know what? He's the the great hope around here for a struggling franchise and rebuilding, but we'll see. They got the
Yeah,
luck of the draw and the kid's a phenom, so they're already enshrining him in the Hockey Hall of Fame and I'm like, we might want to wait a minute. Let at least play in a regular season game first
or yeah,
before
maybe a
we
full season
send
before
him.
we get too to get too carried away. And you're right;
Yeah,
he's
let's
young. He's just turned 18, and so he's going to I'm sure have an incredible NHL career, and hopefully he does well for you there in Chicago with the Blackhawks. with that said, again, thank you so much for coming on and spending time here on the Passive Income Podcast with the Posse. I really appreciate you, and it's been again just an incredible conversation. You're so enjoyable to talk to.
Well,
With that
thank you.
said, if you're still here 50 minutes later, please be sure to hit that subscribe button below.
Make sure to put that eggplant emoji in the comments to let us know that you watched this far. So yeah, thank you for having me on, man. I appreciate it.
Awesome. Thanks, Russ.